The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 5th, terrific Thursday edition of the Money Masters Show. I'm host Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome each and every day is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with empowering beliefs. Words of wisdom. Words of wisdom brought to us by our extraordinary producer who makes everything that each of us contributors here at TFNN seem so seamless, and I can assure you it is not. And that's our man, Al. And he starts his day off with this incantation, and you should too. He starts off by saying, hey, watch your thoughts, for they become words. And then watch your words, for they become actions. But watch your actions, for they become your habits. Oh, and watch your habits, for they become your character. And watch your character, for it becomes your destiny. Yes, folks, it is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. We've had a lot of movement in the markets here. Certainly interest session. No reason for it to not continue. Right now, we've got the Dow. It's up 7 points. It's trading out at 16,745. S&P back $1.30. Trading out at 19.26. Composite is now just slightly turned red, but really it's flat out here, trading at 42.51. Russell 2000 off 70 cents. It's trading at 11.31. NDX 100 off 50 cents. New York Stock Exchange down $3. Goldilocks up $8 this morning, trading out at 12.52. Silver up 20 cents. Trade out at $19 even. Steven, light sweet crude back 95 cents right now. She is trading out at 101.69. Our call-in number, 877-927-6648. Would love to hear from you. Give me a call. We can take a look at your stock chart. A quick peek around the globe here. The DAX is up 12 points right now. It's flat. And the FTSE is down 12 points right now. So not a lot of price action going on. Of course, I didn't really pay attention to what it was doing here earlier this morning. So it could be well off of its session highs for all I know. And only one way for us to take a look to find out, and that's to take a look at the stock chart. So we'll go do that because, especially inside the DAX, just remind me to do that. It's got that little potential island reversal pattern that is out there. In any event, let's go start off our day. Let's go start off our day by taking a look at some stocks here that are moving and grooving. Let's go take a look at to the downside. PVH Corp. It's off $10 this morning. We'll take a look and see what it's doing. It's a gap down below its unfair low on its daily chart out here. That is bearish. So where's it coming back to? It looks like this broke out. Here's a volume bar. This broke out with some wide price spread, accelerated volume on the trading session of March 26th. Let me widen this up here for you a little bit, make it a little bit easier for you. Remember, when you open up a stock chart, one of the first things that your eyes ought to do is go gravitate to volume bars out there, see what they're doing. And in the case of PVH Corp, on the trading session here of March 26th, if you look down really towards the bottom, it's a white little bar on my trading session. You can see up with some nice volume. Volume, by the way, on that trading session was 4.6 million shares out there. Created a little bit of a gap. What we can see here is prices now move back into the gap. Now, you like to see something come back to a breakout area. Unfortunately, you don't like to see it do it the way that it's done it here. What do I mean by that? Gapping down into that is not a good thing. Volume then becomes your next area. Remember, you're looking at about 4.7 million shares as your benchmark. Well, we've been trading for 40 minutes, and it's done 1.7 million shares. Now, if volume keeps up at this pace here, then what you're going to see is it move all the way down to test out the bottom swing point, and that's the March 24th level. And that's at a price area of about 114.23 out there. If it breaks 114.23, that becomes really bad news. Why? Well, it becomes news, because it would confirm an A to B equals CD to the downside. You may say, well, what does that look like? Well, your A point, a little lightning bolt pattern, happens to be the swing point high from January 3rd out there. That becomes our A point. Our B point we're going to use here, I don't know, let's see, the low on the trading session of March 14th is what, 114.10. 114. Yeah, we'll use 114.10. That's the actual swing point. So that's going to be our B point. And the C point up here looks like it's probably right around the May 19th area. That becomes your C point at the 133.72-ish range. You can see it did a .786 retracement, 78.98 to be exact. 1-to-1 A to B equals CD would take price down to the 108.88-ish level. If it breaks that with volume, I would say the way that it's now come off the C point here, you're more likely looking at 102.12 out there. The only real positive here is on a daily chart. This is moving down into a oversold condition rather quick. But I would expect that what this is going to do, if it does not hold this gap here, the gap that was created on that trading session of March 26th, you should see it come down and test the B point, the swing point area, which would be the level of about 114.10. That is on PBH. Let's put it on a weekly chart here real quickly. See, I would imagine with the gap down, it's below its unfair low, its resistance or its support area. No, it's not, as a matter of fact. So on the weekly chart, this thing says it's got support at about, it is below it. I take that back. It just formed this week, 121 out there. So if you're long this equity, be careful, because you're not getting a whole lot of messages that suggest being long is the right move out there. So that's leading the charge to the downside dollar-wise. Let's take a look at, something we haven't looked at here. Well, I don't recall looking at Smith and Nephew. SNN is the ticker symbol. We'll start off by looking at the weekly chart out here. So it had a real nice pop yesterday. It's giving back some of those gains here this morning. So, in fact, on the weekly chart, it's in a nice buy-ish type mode. Not bias, but buy type mode. But let's look and see what's going on the daily chart out here. Go take a look at the volume yesterday versus today and so forth. So yesterday, this thing moves up to a price level, gets up to a high of $100.90. Nice volume behind the move, 2.1 million shares. Today, this candle here is it's a timeout candle. It's a bearish harami, but it's not a bearish reversal sign. But pulling back with some pretty decent volume, so some good profit taking going on inside of SNN, Smith and Nephew PLC out here. Volume so far this morning, 1 million shares. That's after, man, that is just too much volume on the pullback here this morning, because yesterday was up with 2 million shares. We've only been trading for 45 minutes. Something to think about. Let's take a look at Netflix. Let's go see what's going on inside of Netflix out here. NFLX is the ticker symbol. Daily chart looks pretty good. Now this thing has done the very large. It's done more than the 1 to 2 A to B equals CD to the upside. No bearish reversal signals yet. You would get one today with a close below 416.76. So 416.76 would give you a bearish reversal signal out here inside of Netflix. That would say that likely you'd see Netflix pull back to 406.55. If it closes underneath that, look for support right around the 391.31 type level. That is what's going on inside of Netflix. Let's take a look at Alexion Pharmaceuticals. ALXN is the ticker symbol. It's down about 2%, down about $3. Now, Alexion Pharmaceuticals here on its daily chart ran into resistance at the market profile high, 169.37. It's trading out right now at about price level 166.42. Looks like this will pull back and test its support area at 161.08. That is on Alexion Pharmaceuticals. Let me see any other patterns out here to be concerned with. At this stage, not too bad. Not too bad. Let's look at the weekly chart. Let's go see what's going on inside the weekly chart for Alexion. ALXN is the ticker symbol. And this looks pretty good, other than running into resistance. So you can see on the weekly chart, in order for this to really break out to the top side, upside, breakout, it needs to clear 165.81. Now, it's trading right now 166.28, so it's clearing that area, but it needs to do this on a weekly chart out here, and that would be short-term bullish. But the daily chart says it wants a little bit further to pull back At least that's the way that it looks as we speak right now. ALXN is the ticker symbol. Let's take a look at Illumina. That's moving to the upside out here. ILMN is the ticker symbol. That is above its unfair high. That's breaking above resistance, so that looks pretty nice. So let's go see here, kind of A to B equals CD patterns. Well, I guess you'd use as a B point here. You would have to use the session for May 27th, which had 1 million shares. 1 million shares versus today. It's already done more than that. So you've got Illumina. I don't know what news was behind it, but it's breaking out most certainly, and it's doing it with volume. Let me see what else is it taking on volume-wise. Hey, it's above this. It's above another high. So here's a nice high volume high, and take a look at how price gets back to those high volume highs. That's on the trading session of April 23rd out there. April 23rd, it did volume of about 6.3 million shares. Now it's up and over that with a lighter volume. Let me get rid of this A to B equals CD to the downside here. There we go. We clean that up. So it looks like Illumina on a daily chart looks like it now wants to make a run for the swing point for March the 4th. So it looks like it's trying to get up to the 181-ish type level out here. Let's see what the weekly looks like. See if it's above its resistance point. Illumina again, ILMN. Weekly chart looks pretty good out here. It says it's going to run into resistance here at 172.18. If it can clear 172.18, and let's see, it's into the swing point from March the 3rd. That has volume of 12 million shares. For the week here, it's up with 5 million shares. It's going to need some giddy up and go. So it would look to me like 172.18 inside Illumina will act as a resistance. Maybe ought to pull back, recharge, and try to mount another charge to go and get above or get into the what is it here? Give me the price level. 183.30. It would be bullish, though, to close inside the swing point low out there, which is 164.02. So on the weekly basis, if it closed below 164.02, it probably just pulls back a bit to try to mount a charge to take on that swing point. Now, that swing point, if it can clear 183.30 out here and do it with more than 12 million shares, it's going to be a huge A to B equals CD to the upside. Let's look at the monthly chart out. Let's go see what's going on its monthly chart. See what that boy, that's a big A to B equals CD to the upside. If in fact it can, it can take it out. And monthly says that's really what it would like to do out there. What does that mean as far as an A to B equals CD over the longer haul out here? Your A point would take you all the way back into October of 2011. Your B point is a swing that it's dealing with right now, which is from March, and that little retracement, shallow retracement out there, that would actually say that Illumina wants to get up to about the $285 level. So could be a nice long-term holding out there, one that you'd want to take a look at. Let's go look at what else we have that's popping out here to the upside. Now, I'm not talking about the actual indices as we speak right now. I spent a lot of time during the 9 o'clock show this morning taking a look at first the euro-yen, what the message was behind that, some correlations that go on between that and the S&P futures, the Dow and GE. And so I covered a lot of that and didn't really take a look at any individual stocks out there. But right now, we do have that pop and drop that is occurring and was to be expected. The Dow's off 24, S&P back 4. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Kind of a flattish type market out here right now. Dow's off 3, S&P is down 2, Composite is flat out here, Russell 2000 is off 85 cents. Let's go take a look at some of the intraday charts out here, and let's go take a look at the 120-minute time frame. Now, I've got the Rose Momentum Indicator system up on our screen here. That's what we're taking a look at. And we're looking at the NASDAQ. Now, the NASDAQ has been on fire. NASDAQ led the markets down. NASDAQ have led the markets back up. And the most interesting area for us to be paying attention to, so right now, even with the market, you can see it's in NASDAQ NQ. This is the futures contract, the June futures contract. It's still in super bullish mode out there. That is the light blue area. So it has not given that up. It has not failed just yet. 37.42 really acting as kind of a key level of support. But the real area for us to be watching for on any impending decline out here inside of the NASDAQ, where it will really give us a clue, should be yesterday, 10 o'clock in the morning. Create a nice little hammer candle. The top of which is, let me see here, the high of that candle is 37.29.50. Low is 37.14. The breaking below that low would not be good. That is an area. This has been an area here in those lows inside the NASDAQ. It's been fought off by the bulls several times. Back here at 10 o'clock in the morning, that was on June the 3rd, formed a bull sash candle, again defending those low type areas out here. So that's very important to watch. I'm not saying that price is even going to get back there. I don't know if it is or it isn't. But should it move back there, the key level to really watch the 37.14, and that is inside of the NQ. Because if it's to maintain the bullish mode out here, that level should, in fact, continue to act as support. In fact, that would be a potential buying opportunity out there. And if it fails, then we see a deeper retracement. You may say, well, where would it retrace to? So that's a great question. Let's go take a look. Let me just switch over and take a look at a different chart. Easier for me to do the retracement on it. Where is it? It's right in front of me. So I'm really multitasking here this morning. If we take a look at well, let's just simply, it's a great question. Let's just, the real question is, what are you going to use as your retracement levels out here? Because realistically, what you should be using is you should probably come back to the swing point right here, right around 12 noon on May 16th, but that could be a bit much. But I would say maybe 36.75, so not unreasonable. If it does break its hammer candle on the 120-minute chart out here, that means the law closed below 37.14. Then you can expect 36.75 or so in the marketplace. So we'll take that one thing at a time. Let's go down to Paramus, New Jersey, to our man, Victor. Victor, thanks for calling. How you doing this morning?
How low do you think CLF can go? Can't hang on that long. I'll listen later. CLF, how low can it go?
CLF. So that's Cliffs Natural Resource. Now, you're not in it right now, so you're looking to buy?
No. Yeah, at $11. That's what the point and figure chart says. Where do you think you can go?
Well,
I'll pay the good dividend.
Yeah. Let's see here. Man.
Sort of like a veil, isn't
it? I'm going to switch charts here. Let me just see here what I can. Give me a second here to do that. CLF, because it certainly isn't a downtrend out here. Let's see what else might be visibly. I'm going to put it on a weekly chart here first here for us, Victor. So what it's doing right now, man, it's taking out swing points from back in July of 2013, so that's not good. So the answer to your question is, it looks like it wants to make its way all the back to the 2009 area. 2009, 1184 right now is March. The March 2009 area is where it looks like Cliffs Natural Resources is headed to. And what I would
follow.
What's that?
You think the market in general will follow that same way?
Nah, I wouldn't say Cliffs Natural Resources is an indicator of where the market will go. But it's almost into that swing point. The high of it is 15, but it isn't the swing point. Son of a gun. It's in the March 09 swing point. But I guess I'd throw out to you the following. Forget about the dividend necessarily. There's something that's wrong here for the markets to do what they're doing and for Cliffs to be all the way back to March of 2009. But if you're going to play it, what I would do is I'd get back, let it go test those lows, because it looks like that's what it wants to do, and then wait for a sign of strength. I think that was Victor. I'd have to say you really don't want to step into this until you see some kind of sign of strength, or maybe even some kind of accumulation. You'd like to see this thing being accumulated at lows out here, and then a sign of strength. Anyway, that was Cliffs Natural Resources. CLF is the ticker symbol. Kind of a flat market as we speak right now. S&P is flat. NASDAQ up about 4 points. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 6. S&P is down 30 cents. NASDAQ is up 4. Russell's up 70 cents right now. And what I've got on my screen here is the 10-minute chart for the S&P futures. Let's just kind of try to navigate through what the market is at least doing at the moment. So I was taking a look at the ES Mini 10-minute time frame. Wanted to see, where price was moving down into. Now I'll have to put this chart back up on the screen. It stopped. I think if I put this up here, it shows. That's the euro yen. Give me a moment here. It actually stopped. It actually found support, which is always amazing to me how this works. The most powerful lunar aspect is not the full moon and it's not the new moon. It's when the moon is furthest and closest to us during its cycle. It's referred to as apogee and perigee. Apogee is when it's furthest away from us during the cycle, and perigee is when it's closest to us. And I can tell you when the apogee lunar phase came in, it was like at 22 after midnight on June 3rd out there. 22 minutes after midnight. And the ES Mini was trading at 1921. Now, I drew that. I religiously go ahead and mark on my charts, and I trade around it as well. There's a strategy out there in any event. And when price pulled back this morning, during the time period that we've been on, from 10 to 10:30, price got down to a low of 19.21 and stopped there. Now, how did it just stop at 19.21? That's the thing that always just amazes me. It stopped. It's not as if it's 19.21 is even. I can't even say, hey, that was Leonardo Fibonacci, because that's not a 0.618 retracement level. That's 1923. 0.786 is 1919 out there. Now, it's a real key area to watch, because if the market, if the ES Mini closes below that, the signal there is that you want to be short the market. Likewise, if it maintains and it holds there, it tells us a lot of important information. The pop and drop that I suggested would happen in the marketplace, that's already occurred. You know, the Dow futures up 60 points or what have you. I don't remember what NASDAQ was up. So we've seen the pop and the drop. That's why I'm trying to put all of this together and correlate. The reason why I'm doing that is because we've also happened to see the U.S. dollar index, as an example, that was so strong. It was up 200 ticks. It's now down 176 ticks. We've seen a big, huge reversal in the role of the euro-U.S. dollar. We've also seen a fairly large reversal inside the euro-Japanese yen out here. So I'm just trying to, and I can tell you in my mind right now, it's not clear to me I know what things to watch for. And we I don't recall if it was during this show or was in the last show. I said the bullish side on the euro yen would be that the retracement, the pullback would stop at that 138.72, and that we would see it close above 139.94. Now, I'm going to go ahead and erase this off of the screen here, make it a little bit easier for you to see. So you had a little doji candle that formed yesterday out here. Now, that doji doesn't have a ton of meaning, with the exception of with regard to, hey, what's price going to do today? Price closes below that doji, leaves are falling from the tree, but we've already seen a 0.618 retracement there. And if that's it, then what the euro yen is doing, it's setting up an A to B equals CD to the upside. Getting above that high of 139.94 would do that, and that would bode well for the mere fact that we just saw a buying opportunity, and at 1921 level inside the ES Mini was actually another signal of that. And I'm not going to discount that. So that's really one of the areas that we want to watch. So, I know this is not the last segment when I usually kind of summarize it, but really just trying to take a look at the market, what it's doing right now, and its message. So I would have to say, if that were to be the case, and that was the buying opportunity, we ought to see as the market continue to move higher today, and you would see the New York Stock Exchange generate more than 552 net advancing issues, and then the bulls would effectively have taken back control of the market out here. But so many movements inside the currency area, that's really what we've got to be paying attention to and focus in on out here. I mentioned the U.S. dollar index just to give you an idea of its gyrations out here. Let me put up the U.S. dollar index. Now, I've got a 10-minute delay on this because I don't want to pay the $80 a month just to simply have access for 10 minutes. It's not worth it to me. But you can see the wide price spread that we've seen inside the U.S. dollar index, high of 81.07 and a low of 80.43 out there. Do people believe that Super Mario is just simply not a man of his word, that he's nothing more than a marketing machine out there? A guy that says, hey, we're going to go create the European Financial Stability Fund and then don't fund it. And then we're going to create the mechanism called the ESM, and who knows what the heck they've done. And now what we want to do is we want to go out there and we want to work on developing an asset-backed securities program. We want to do what Ben Bernanke had been doing for the last many years out here. I don't know. Right now I can tell you that somebody's not buying it out here with the U.S. dollar index giving. And if we go back and take a look at the euro out here, kind of interesting. It's rejected the descending price channel out here. This is the weekly chart. So the weekly chart's going to have different price channel lines than the daily chart does out here. And in fact, if the euro tomorrow were to close at, and kind of just trade like this and close at about 1.365, out there, on a weekly chart, would form a hammer candle coming right back into the resistance area of the descending price channel out there. That would be pretty important out here. So again, just piecing it together, and tomorrow we'll have a pretty decent indication, I suppose, of what that looks like. But today, right now, it's still a bearish-looking candle out here. But the way that it's fought off those early morning declines out here, That's pretty impressive. And so that's really what's going on inside the market, at least as I'm taking a look at things right now. So let's go take a look at the VIX index. Let's go see what the VIX index is doing here this morning. Really just trading sideways. So not a ton of movement in the volatility. We know as long as the VIX is below the 50-day moving average, that is, by the way, priced at now 1303. The VIX is at 1206. As long as price is below that, that is more bullish than it is bearish. Markets can move sideways to higher when that is what's going on out there. So we go back, we take a look at the ES Mini. It has held that 1921 level. I mean, you know, I know who uses Apogee and Perigee, and it's not the normal trader. It's not the millionaires that use it. It is the billionaires that absolutely use the Apogee and Perigee lines out there. Okay, so that's enough of that. Let's go take a look at some of the. Let's go take a look at some stocks here. See what they're doing. Give me a moment. Let's actually take a look inside some of the sectors. Let's do that. Let's take a look at. Let's take a look inside the basic materials. Let's take a look at potash. POT is a ticker symbol. It's down 0.5% here this morning. Let's go take a look at it on its TAS signal box area. So it's below its unfair low out here. No A to B equals CD to the downside. Trading out at 35.37 out here. Potash, could easily be doing a retracement. It's got a swing point that's got some volume back down here on January 30th, 2014. So that's an area where we take a look at a retracement. Let's go look at the weekly, see if on the weekly it's below a support level as well, which would not bode well for it. No, it's not. So on the weekly basis, we'll blow this up on my screen here just a tad. 34.95 looks like that's where it wants to trade to, and it'll try to find support at 34.95. If it can find support there, bounce off of that, it would be setting up an A to B equals CD. Now, the B point of a smaller A to B or another A to B equals CD, March the 31st. Volume there was 30 million shares. Price got over with 26 million. 23, yeah. So it's up and over that B point with light volume. So no wonder it's pulling back and maybe wants to pull back, get to 34.95, and then take another run for it. If it was able to form an A to B equal, and it's also got huge. Here's the downdraft. You can see where it really was running into issues, supply line issues. Was that July 29th level, and the top of that is 38.09 out there. So expect that to be some pretty substantial, pretty significant resistance. And that is on the weekly chart for potash. Let's take a look at American Airlines. I'm sorry, Alcoa. What am I talking about? AA. Alcoa. It's trading out at 13.85. It's up 3 pennies here this morning. Let's go see what it is trying to run into. So you got Alcoa on a weekly chart. It's got some substantial resistance out here that it's trading into. 13.89 looks like that is the number. It's trading right now at 13.85. It has hit 13.88 thus far this week. Would be very bullish on a weekly basis with regard to the market profile for Alcoa to close above that. So that is well off of the lows, well off of the bottom back in the time frame of August of 2013. Been one heck of a straight line move to the upside out there. Daily basis, let's go take a look at the daily chart here for Alcoa. Let's see if it's also, it's above its resistance level, but I would expect that weekly to really act as a fairly strong resistance. We can see here that this has been making higher highs with less relative strength. If you take a look at the very bottom portion of my screen out here, it's been doing that ever since it made a swing high back on April the 1st. So that, too, making higher highs with less relative strength would really suggest that weekly resistance should come into play. And that is for Alcoa. Let's take a look at Wells Fargo. WFC is the ticker symbol. Wells Fargo is trading at 51.20. It's up 16 cents today. Let's go see what it's running into. It's in nice bullish mode action here on its daily chart, well up above resistance. In fact, this could be forming a nice A to B equals CD. The swing point is April 4th. 187 million shares out there. No, 18 million shares. 207. 18 million shares. And it crossed it with 13, 12, 13. just can't get the energy to get beyond that swing point with volume. So you don't have a confirmed A to B equals CD, but nonetheless still in a nice bullish mode. It's up above its market profile in the daily at resistance level. Let's take a look at the weekly as well and take a look at it. So I can draw you the A to B equals CD. I'll go back and do that. Weekly chart, also nice bullish mode out here above resistance. Swing point-wise on the weekly, March 31st was 75 million shares. Last week you were into with 54, and now it was a shortened trading week for sure in light volume. So you have to do some kind of algebraic equation out there, but it's it doesn't have a confirmed A to B equals CD. Wells Fargo. Back on the daily chart, what does the daily A to B equals CD look like out here? Let's go take a look at it. We'll use the longer one that you would use. This is the correct one to use. You would use the swing point low back on February 5th. That would be your A point. Your B point would be that swing we're looking at April 4th, and your C point back on April 11th. And 1-to-1, although not confirmed, 1-to-1 says it wants to get to 53.04. It's trading at 51.17. I don't see any reason for it to not make its way to 53.04. That was on Wells Fargo. Let's take a look at J.P. Morgan. J.P. Morgan today up 7 pennies, up about 0.1% out here. J.P. Morgan on its daily chart up above its market profile resistance area, slightly above it. 55.76 is where it's trading, and the daily resistance level is 55.73. So just slightly above it as we speak. Of course, it is trying to get into the gap, really trying to fill the gap, trying to get back to the April 10th downdraft area. And that low is at 57.38 out here. But let's take a look at its weekly time frame as well. See what's going on as far as resistance here. Is it up above a resistance level on its weekly? No, it is not. So 56.58 is the number inside of J.P. Morgan that it ought to find some significant resistance at. Let's look at... Let's go look at, I say I got the financials up here twice. Good, I can get rid of some of this stuff. Let's look at Apple. Let's go take a look at the Apple chart, see what it is doing. It's trading right now at 646.92. It has an A to B. It has a confirmed A to B equals CD to the upside that wants to take it to the 679. Is it confirmed? I don't recall. Let me see here. 74 million shares. It did not confirm that A to B equals CD to the upside. Nonetheless, and that's a weekly chart we're looking at. So on the weekly chart, it says it wants to get up to 679 out here. Right now it's trading at 646. So that would bode well for the longer term, certainly for the Qs. Let's see on the daily chart if there's any resistance here that it's running into. It's up above resistance, closed above 639.96 yesterday. That was a daily resistance level, so long and strong inside of Apple, AAPL. Let's go look at Ford Motor Company out here. Let's take a look at Ford. It's trading off 6 pennies right now. Let's go see what it's running into. Nonetheless, off 6 pennies, but up above a resistance level of its market profile, which was 16.56 out here. This could be an A to B equals C to the upside. Let's see, 26 million shares on April 3rd, and you're over it with 33. Yeah. You've got a confirmed A to B equals C to the upside inside of Ford. The A point is March 14th. The low down there, the B point looks like April 4th, and the C point down here on May 7th. Well, it's just completed that. How about that? So yesterday and today, 1686 is the number. It has just completed its 1-to-1 A to B equals CD to the upside. Right now, we've got the Dow. Is up 21 points. S&P is up a point. Composite up 5. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open, even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 17, and the S&P is flat. Composite's up 4 points. Russell 2000 is flat right now. So, in recapping the markets, what we've seen thus far, we saw a pop and a drop. Okay, and I've got the 30-minute Dow futures contract up on my screen. So just to let me get the cursor out here. So just to give you an idea, we had the Dow futures had gotten up to a price level, the high of 16,795. We've seen a low so far of 16,696. So we've seen a 99-point swing, right? So we've seen a 100-point move inside of the Dow from high to low thus far. That's yet when we take a look at what the Dow Jones Industrials is doing, the actual cash index is up 16 points out there. So that doesn't really tell the story. What tells the story is what we've seen intra-session. Now, it's a 30-minute chart we're looking at. So we saw that high take place between the 8:30 and 9 a.m. session, just as we saw the low take place between 10 and 10:30 this morning. So the levels here to be watching for at this stage here, the bulls The bull, the Bears have had a chance. We'll see how this plays out today, but I can tell you this much. The retracement that I'm looking for could have taken place, will have taken place, if we see the Dow get above the shooting star. It's the 30-minute chart here. I like to use hammer candles because they're great candles to really identify areas of where support should be out there. Now, you can't just use candles. You can't trade on candles. Trust me, I've got a tool that allows me to go take a look at every hammer candle, whatever time frame, whatever chart, or whatever, and you can't just go long hammer candles out there. That's not how you trade them. But they are great tools to identify the defensible positions of bulls, just like in shooting stars, which is the opposite of the hammer candle. That's what we have that took place on that 30-minute chart between 8:30 and 9 o'clock this morning. That tells you where the bears are really camping out, the sellers out there. So it says if the Dow futures were able to really mount a charge out here, then you'd see the Dow futures close above 16,795 today out here. If we just look at the bodies of the candles, you see those are extreme emotions. The wicks are extreme emotions. We pay attention most certainly to the bodies of the candles out here. At this stage, if we do that, the bulls really have more control of the Dow as we speak right now. And the reason that we're taking a look at, if I go take a look at the S&P, let's do the same thing out here. Take a look at the ES and then the NQ. Now, you can see a similar type swing. Inside the ES, you were up at a high of 1934 and a low here this morning of 1921. 1921. So you're looking at, what, a 13-point move? That's a pretty good move in the morning here inside the ES Mini out here. Now you had a shooting star and a bearish engulfing, and that 1921 level held thus far. So the key area to be watching today is 1921. If the bears are able to crack that, then there's more retracement to come. And if that area holds, and you're able to continue to see the Euro-US dollar continue to, let me put this up here, see if we can go find it. The Euro-US dollar continue its move higher right now because it's fought off that 0.618 retracement level. And we'll know that it should be able to close above 139.94. We'll call 139.95 today. It closed above that. And the early morning sell-off was a buying opportunity. Simple as that. In any event, that's my read as we speak right now at 10:58 a.m. Our man Basil Chapman, he's in the on-deck circle. I see him getting ready to, it looks like his bases are loaded and he wants to hit a grand slam. So we'll have Basil up here shortly. And it is wonderful. No, it's terrific Thursday. That means we got Larry Pesavento, we got Daryl Martin, David White, Andy Heck, the Tom O'Brien Show from 4 to 6, folks. 9 hours of programming. Thanks so much for spending your time with me. I look forward to seeing you tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.